Howdy.
Hey.
Welcome back.
Thank you.
So everyone, welcome to this November 29th, 2024 Friday edition. You know, if it was the 80s, I could have some cheesy video effects, like sound like Friday, like Friday edition. So we had a little problem yesterday with scheduling. Richard was on the road. He was flying yesterday at this time. So we decided to postpone it until Friday instead of Thursday. So I hope that didn't screw up too many people. If it did, we're deeply, deeply sorry. And we'll try to make sure it never happens again. Gendrea, how you doing? Core from Holland. Great to see everyone here. A quick reminder, if you have any questions, drop them into the Q&A section in the box. And we always do some Q&A for the last 5, 10, 15 minutes of each 30-minute session. Hey, so this day in history, this morning I saw that Pong was released in 1972.
Oh, wow.
Yeah. I remember that too, because I don't know if you remember, there's an episode of The Simpsons a long time ago where these aliens came and they're going to share their technology, and this is for your entertainment. It was Pong, and they're like, "Oh, it's just Pong, man." You know, have you mastered interstellar space travel? You know. Anyways,
how many of our audience actually know what Pong is?
Yeah, I don't know. That's a good question.
I'll see if I can find it.
Well, let's face it. Trading is Pong. Market making is Pong.
Fair enough. Yeah.
You know, if you just want to, well, maybe.
Well, there is a market making strategy called ping pong.
The ping pong, yeah, that's true. Yep. You fill on one side, don't do anything else until you get filled on the other side. So you just keep flipping back and forth. You don't maintain a two-sided market, but yeah, that's cool. Also, George Harrison died this day, 2001, I think. Now, that's funny because when I read that, I was like, oh, yeah, I kind of forgot he was dead. But then the more I thought about it, I remember I was driving in my Jeep. I was on Vancouver Island. I was driving through this beautiful forest, part of a park, and I heard it on the radio that he died. It's funny because, you know, I'm George Harrison. He's fine. It's not like I idolized him or anything, but that just stuck in my head for some weird reason, that memory. So, yeah, I think he died of cancer, if I'm not mistaken. But
that's terrible.
Yeah, he was an interesting guy. Actually, there's a documentary that came out on the Beatles maybe a year or two ago. It was all this footage they had of when they were filming. Like each session was like 2-3 hours of footage, and there's like, I don't know, maybe 12 episodes. It was just them jamming and talking. It was actually really interesting. I didn't watch it all. Maybe about half of it, and I got bored and I did something else. But I wouldn't mind watching the rest of it someday.
Let me just get this straight. It was really interesting, but you got bored.
Well, I get bored easily, you know. So.
It's not you, it's me.
Yeah. Vladimir says, hello, find a time to get in touch with me. You won't regret it. You know, I've been solicited like that many times by the fair sex.
By young gentlemen.
Young gentlemen. Yes, okay. Vladimir, we will get a hold of you, yes. All right. Yeah, enough waffling. And
apologies about that. I mean, I've been busy traveling twice this month to Dubai and London.
You have been away a lot, yeah.
And, and it's showing. The cracks are appearing. Things just fall apart without me around.
I'm just looking at myself on the monitor here. I look quite orange. Do I look orange to you?
You do. It's very Trump-esque. Yeah.
I was just going to say there must be a Trump filter on here. Anyways, if we have time later, I'll tell you a little joke about Trump that I found very, very humorous. Anyways, you know the topic, so it's true. Yes. Okay. So let's talk a little bit about Bitcoin. Bitcoin, quite interesting. Here, let me share my screen. So what are we talking about today? On today's episode, we're going to talk about mean reversion and why it's one of the most powerful forces in the market. And I don't mean being angry and mean like Richard is most of the time. I'm talking about reversion to the mean, the mathematical principle. Let me just share my screen. We can sort of chit-chat a little bit about what's going on. Do you see this? You see this?
I do, yeah.
Okay. Actually, I was looking at the S&P this morning.
Whoa.
It's pre-market. Look at this. Right back up,
Yeah.
Back up. A lot of people are talking.
They've got a lot of inventory to unload before the crash. So
yeah.
And
I was looking at
Michael.
Bitcoin.
I'm telling you the plot. Yeah.
Well, I should buy puts now, right? S&P puts now.
I have some trades in the S&P.
Okay.
Yeah.
It's funny because a lot of people I was reading, like they're calling for 6666 in the S&P, and I don't know. Maybe that's a long ways. I mean,
10% away. Yeah.
Way up here. I mean, yeah. How? Yeah. Well, I guess I don't need the ruler to say it's 10%. Yeah, nice even number there. But yeah, that would be cray. That would be just nuts. And the VIX, the VIX has stayed down quite a bit. But the other thing I was looking at this morning was our good old friend MicroStrategy. It had that pre-market open, crashed right back down, but it's kind of hovered here. It's kind of hovered and stayed in this.
I have a little claim to fame here. A friend of mine had a shed load of MicroStrategy, and I gently suggested to him that maybe being 100% all in on MicroStrategy
maybe not the best.
Maybe not. I mean, it may be a fantastic trade, but it may not be the most comfortable trade for the next.
Yes.
Fair enough. And he sold half his stash at I think it was about 500.
That's fantastic. Yeah.
Then the market rose, so he called me to say, you were wrong, and then
it corrected. Yeah. No, selling at 500 was a fantastic trade. If you sold up there,
that was one of my better timed comments. Yeah.
Yeah. I mean, even just this nonsense here is a little terrifying. 340 up to 400. Like you just don't know when it starts going. It starts going.
And when it was at 500, you could sell a 600 call and buy a 400 put. And receive a $50 credit.
That's volatility is a beautiful thing, isn't it?
Yeah.
Wow.
Sorry, I beg your pardon. $50 debit, but you now had a half price collar on your upside bet. 2-to-1 bet.
You know what I forgot to do? I promised everyone last time that I would update all this support and resistance because this is all sort of it's not invalid. It'll be valid if it comes back down.
Well, I'd like to know now where our support and resistance are because I'm trading the systematic.
There you go. Here's the no-brainer. Silly chart. And then I'll draw another one down here, and there we be. There you go.
Okay,
base everything here. Here you go.
So we're selling puts at 88 and calls at 100.
Yes.
Calls at 100 feels scary, but I think it's probably not a bad trade myself. Again, on my my private S&P thesis.
Yeah, and if we do them as spreads, if it decides, I wouldn't be surprised if we bounced around in here for a while. Who knows? We might just crap out, but as long as we do it in spreads and you can do it 1x2s, whatever, or hedge off with futures, whatever you like to do, you can do.
So we had in my systematic books, we had a rough month in November actually. So because we had massive vol, and for about a week of the month, we had more realized vol than implied. So we lost money in that week. But actually, we've ended up. I mean, there's still a day to go, right? But we've actually ended up unleveraged. Our short vol USD books are up 6% on the month, and our short vol BTC books unleveraged are up 3.6.
And that's for the month of November.
Yeah. So it was like a real rough ride, but it's still printed money.
Good. Well, that's a nice thing. If it's so for you, what is your worst case scenarios generally? What's the market going to do that's going to cause you the most amount of grief?
Literally, what it did. So you saw how vols contracted. If I show you the historic vol surface.
Here, I'll stop screen sharing.
Let me quickly pull that up. Hang on, let's see if I can do this without boring everybody too quickly.
Marcus says, "I love MicroStrategy." Marcus, he corrected you. 470. He said, "I assume."
470. Okay, there we are. Yeah,
good old Marcus.
See you. But I thought the comment was great. It's gone up.
Yeah. Just while you're looking for that, Corey, you said some kind of yellow here. What are you talking about? Yellow. What?
And then it's Marcus on. That's good because he then a couple of days ago said, "What are you doing with the money?" He said, "I'm going to go into shit coins."
Well, and that's. But the funny thing is there is. I think you've had some discussions. We've seen some things online where a lot of funds, a lot of VCs, they're piling into the meme coins. They're piling in heavy.
Yeah, I've had some discussions with VCs. They're saying that they're not investing in real projects at the moment. They're just buying shit coins.
Crazy, hey? Crazy upside down world.
Yeah. Okay. So here's the vol over the past month. Can I expand that? Yeah, there we go.
Mm.
It doesn't look too severe here, right? On this sort of big flat chart, but you see how. Actually, zooming out. There we go. Here's November. So this yellow line is the 1 week at the money vol. You see how it crawled up all the way to the election, and so I was selling vol into this, and then immediately after the election, the vol sold off for 2 days. In those 2 days, I made 5% on the book, and then the market then started its rip up, and it doesn't look too strong here because the scale, but actually this was a big move up, right? And that rip up cost me 4%. It was the increase in vols and the gamma. So I actually gave back almost everything I'd made in that drop. But actually, because we'd been able to store the value in the vol surface, and vols remained elevated, we were able to get it all back by the end of the month.
Nice. And I think I mentioned it last week on our call too. I think that you had commented to me that when that vol collapsed, you were thinking, Jesus, should I flatten the books?
I did say to my partner, we should just flatten the books. And the thing is, it's a systematic book. If you do and you're wrong, because vols could have carried on selling off, right?
And maybe it'd be good to institute a policy if vols collapse by X amount, you'll take off 10% or something. That might just lock in some gain.
That's something we're discussing. So we're actually going to be doing some back testing in the new year on what's the optimal time to get out of your because we've only ever done what's the optimal systematic trade. But now if we can do that, maybe we can turn a 5% a month book into a 10% a month book. Who knows, right? Yeah.
Well, shoot for the stars. You might even hit the moon.
Yeah.
So the topic today. Let's talk about the topic, mean reversion, and so I suppose without even knowing it, most of my trading career, I would trade against the trend. Sometimes you'd see something building up and you go with it, but it's as a scalper, you've got to hit the offer. You can't just wait for someone to hit you on the bid, and you've got to give up the spread. And sometimes that's painful, especially when you get false breakout after false breakup, and you can really churn through a lot of capital. So I prefer to let things go and then hit some area of some type of resistance, make a quick short scalp, and so it's generally against the trend. And sometimes there's some big trades there too, and that's that mean reversion. Now, in a real short time frame, it can be tougher. Longer time frames, it's easier if you have the patience, and you can look at any asset and everything will revert to the mean. Actually, I meant to put some, and maybe while you're talking, I'll put some lines on the chart. I put some EMAs or something in there to show, exactly what the heck I'm talking about. But, everything reverts to the mean eventually, whether it takes a day or a month or a year, it's going to do it. It has to. And there's some very good reasons for that I think you want to talk about.
Yeah.
And while you're doing that, I'll bring it. Yeah, you go ahead.
I was going to show you my LinkedIn post I did because I found someone kindly posted the tulip futures in graph from 655, which I thought was a brilliant example of a reversion to the mean. The tulip futures went up 250% before they reverted back to 0% gain. But I don't have it handy, so I'm not going to bother.
I'll just quickly share my screen. I just brought up this. I just threw on what are these? The oops. Oh, this thing's in the way. That's why I don't see it. Look, I just the 20, the 50, the 100, and the 200. Just to give an example, I happen to be on the 4-hour chart at this moment. Look, this thing, it's right. It blasted through this previous high. EMAs are way down here. Like, oh my God, it just kept going, right? And if we look at the longest one, which is the 200, it still hasn't hit it. Eventually, if you're just trading off the 200, you're waiting for it to come really close to 200, you can close that trade. I think eventually it's going to work out. It might be next March. It could be August. I don't know. It could be in December. But look, eventually it did hit all those EMAs. So if you can just survive and keep your margin low enough, so a lot of people are dollar cost averaging, and I love dollar cost averaging. Some people use other methods or variations on it, and I think it's great. The only thing is you never know when something's just going to keep going and just get ridiculous and then go again. And then, oh my God, it went again. And people are just, you have to start small enough and leave yourself enough margin, especially for leverage trading, because you will get smacked and wiped out. And that's a hard thing to do because things don't normally go that much. So you have to be okay with just accepting those small gains. And every now and then, once or twice a year, it's just going to go and you're going to be thanking the Lord above that you kept it real small and you could add, and then you get the big payday. Go ahead. What are you laughing about?
No, I was just thinking about. I was reading Marcus's comments.
Oh. Tell us why mean reversion is so damn powerful.
There are two reasons why mean reversions are powerful. One is that central bankers hate you.
Personally, yes. Personally,
and so that's the long-term mean reversion, right? Nobody gets rich in the long run because in the end, enough money will be sucked out of the economy to make sure that you don't become more powerful than the people who control the economy. That's the cynical view. And so we can talk about the Great Depression and the liquidity squeeze when we had the mortgage-backed security crisis in 2008 and so on, right? And the dot-com bust. And all of these frothy markets are driven by money printing or debt creation, actually. But in the end, people lose the appetite to repay their debts, and then debts become more expensive, and money creation becomes harder, and money starts to evaporate. This is a constant cycle. I think there's loads of books on this about the 10-year cycle, the 20-year cycle, and so on. Right. So the money supply cycle is definitely mean reverting, and the money supply is what guides asset prices. Full stop. All asset prices are just leverage trades on how much money there is in the world. But in the shorter term, these markets that we're buying from, we talk about the Bitcoin price, and we go to Binance or Deribit or wherever, and we buy our Bitcoins and sell the Bitcoins. Well, who are we buying them and selling them to and from? The common assumption is that we're buying and selling them to each other, but this is not true. We're buying and selling them to market makers, who then buy and sell them to other punters like us. And if the market just continues going in one direction continuously, those market makers will run out of one side or other of the trade. So if the market carries on going up, they're going to run out of Bitcoin. If the market carries on going down, they're going to run out of dollars. And this, of course, will not do. That does not make an orderly market. So they will organize themselves to make it more and more unpleasant for you to buy Bitcoin if they're running out, and more unpleasant for you to sell it if they're running out of dollars. And this tends to add natural pressure. It curbs your enthusiasm and eventually you give up and the market capitulates, and then as it's capitulated, all the leveraged longs sell off and the market collapses back down again. And this of course is when the market makers pick up all their inventory again. And of course, but they're charging a 1.5 basis point spread on all of that, and they're getting their rebates, and so they're doing it at a profit, so they can pay their bills and carry on doing it. So you've got to and that leads us on to this idea of looking at the structure of a market. Markets have these inbuilt structures, and this is why I look at things like the liquidation heat maps, and why I look at the concentration of open interest, and I try and reason about what the direction of that open interest is going to be, what strikes, and what that's going to do in terms of people's hedging behavior. And then what that's going to do to the spot market, because ultimately everything comes back to the spot market. So I remember back at the beginning of this year where the market really rallied up from 30k up to whatever it was, 60, 70. And there were people gleefully saying on X or Twitter, as it was then, market makers are scrambling for liquidity. They can't get their hands on inventory, and And I remember thinking that kind of exuberant jubilation about market makers not being able to get hold of inventory. That's a sure sign we're at the top. And sure enough, we sold off down to 50, whatever it was. And you're starting to see that kind of sentiment again. Michael said, "I'm going to buy it all." BlackRock are buying everything there is. Market makers are struggling for liquidity. They're trading paper bitcoins.
You heard it here first, folks. Buy puts or sell risk reversals. I don't know. Do whatever you're going to do. Richard guarantees it, right?
I never give advice or make guarantees, but I'll put my money where my mouth is. I've actually sold riskies on Nvidia, and it's a scary trade because Nvidia can move like 25% in a week.
Taking a look, it's down 1% today.
Yeah, it was up at close to 150 earlier last week, but it's now down to 135ish, 140.
Yeah, 135 right now.
Yeah. My view on that trade is in the same way that Microstrategy is a big fraud, so is Nvidia, and I think they're going to find huge warehouses of unsold video cards that were bought by fraudulent corporations. And when all this comes out, there's going to be a humongous sell-off in Nvidia. In my view.
All right, interesting. Yeah, so there you go, market makers. Now, a lot of people have a dim view on market makers. They think they're just out there screwing people over, and sometimes it appears that way. And I think the important thing to remember is that market making itself generally isn't a high profit business. It's typically low profit. There's times when they can make a lot. They accumulate a lot of inventory, and they can push it and dump that inventory, sure. But it's very important to remember that without them, we won't have orderly markets, and trading would really suck. It's when you get in there and you try and compete with them that can get tough, because they've got deeper pockets than most people, but they perform an absolutely invaluable function in the markets, any market. All right, let's see. It's got about 10 minutes here. A couple questions from Vladimir, if you're ready. How to properly get rid of deep in the money options if there's no market for it? I assume you have to use futures.
Indeed,
we talked about this last week.
I have a problem like this every weekend, every Friday at the moment, because I'm, as well as trading on deribit and some other large rivals, I'm also trading on a much smaller upstart exchange, which does not even have dated futures. They just have perpetuals and options. And as part of the deal that I have to get the trading rates I have on that exchange, I'm not allowed to buy Bitcoin even. So I can't even hedge upside risk by buying Bitcoin. I have to use perps. And what you tend to find is that if you look at screen prices, deep in the money options have massive spreads. Now on deribit, on quality exchanges like deribit, if you put a bid or offer in close to mid, you'll more often than not get filled, because there's enough sort of invisible iceberg liquidity to take you, or there's someone who wants to do the deal. But on less well-known exchanges, that flow doesn't exist, and you'll find yourself with I was trying to get rid of some deep in the money calls, like they were like 88k, and the market was up at 100, and they were wanting to charge me $1,000 spread. Yeah. And I had to make the choice. Okay, do I pay the carry or do I pay the spread? And in the end, I chose to pay the carry, and that's a $5 million book, and I was paying $4,000 a day in carry on my perps, and that was cheaper than trading out of the options. Those big positions, right? I made money, but still, it's scary. So yes, I think the right thing to do is, if you can trade a risk reversal, so go to the combo screen on deribit and trade a risk reversal. They call it an inversion / reversal. And on deribit, there's two conventions with risk reversal. One is where you buy it to go short, and one is where you sell it to go short. On deribit, the convention is that you buy it to go short. So buying the risk reversal will buy the put, sell the call.
And just so we're clear, if you do that, it will say what's going to happen in there. So don't think, is it a buy or a sell? It'll tell you exactly what you're buying and selling.
Yeah. And so you can literally convert that call into a put straight away. And of course that will change your delta. So if you've been delta hedging all the way up with perps, that will be your signal to sell those perps that you've been hedging with. So otherwise you just suddenly reverse your deltas. Yeah. The other way to do it is to, if you're long perps, as you've been hedging this in the money call, you can use the combo screen for futures to swap your perp for a dated future, and that can be useful for saving carry costs. What you'll find is near the beginning of the rally, the front month futures are still quite cheap. They're still only charging like 12, 15, 14%. But as the rally continues and people start realizing, wait a minute, I'm paying money on perps, they start swapping their perps for futures. That starts driving the price of the futures up. And so you end up paying 20, 30% APR implied yield on your futures. So then you've got this trade-off of do I pay 40% on perps for a day or two, or do I swap into futures and pay it forever? But yeah, so you can buy the future. If you buy the future on that expires on the same date, and you've locked in the delta, so for every call that you're in the money, every 1 Bitcoin of call that you're in the money, you buy 1 Bitcoin of perps, and then just leave it. And what you'll find is that the perps and the future and the kind of futures, you'll find that the futures and the options will expire over the same half an hour at 8 a.m. or 7:30 a.m. till 8 on the Friday, and the benefit of that is that your delta won't change after expiry, and it will all go out nicely, and you won't get on margin call. So that's how I do it. Either use a risk reversal or a combo trade to swap perps.
We've talked before, because sometimes when we do our live stream trades every day out at Rogue Trader Academy, we often try and enter things as a combo because you'll save commission on one side, and there's not a lot of volume there. And we thought, there's probably a great opportunity for someone who wanted to quote on those combo RFQs. I think there is an opportunity there for people to make some money. You'd have to have some money behind you to do it. But yeah.
So we've finally got all of our ops done in our systematic strategy. So the thing now runs without even looking at it. I also don't dare do that, but I now just spend my time looking at dashboards and going out and raising money. And so that's freed us up. So next year we're going to start looking at doing market making of combo books, because at the moment I think the market makers are doing a really bad job and offering really bad value, and I think we could clean up, get all the flow, and still make money.
There we go. Plan for 2025 amongst all the other things.
Yeah, quite.
Quickly, another question here from Vladimir. He says, another idea. Here we go. Just full of ideas. If we are thinking that long-term Bitcoin outperforms USD, buy 1 Bitcoin, place a small perp long on top of it. Since we're going to pay funding, let's say far out of the money calls to cover only funding, and keep increasing position when Bitcoin rise in price more, and keep holding that future.
Yeah, that's fine. Well, I mean, that's just the same as selling in the money puts, isn't it?
Yeah, I mean, yeah. As long as Bitcoin keeps going up,
I mean,
you're good.
Yeah, I mean, you could lock in the funding by just selling that money put. Because the funding cost of the synthetic future on the date of the put's expiry is factored into the price of the put.
Okay. Question from JK. JK made a lot. I like this. Starts off pretty good. He made a lot. I like that.
That's what
made a lot with a 70 to 100K call spread. That's a pretty wide spread.
It's a massive call spread.
Yeah, for 27.12. So the expiring the end of December. Should I take profit now? Well, we're not going to give advice, but should I take profit now or wait one more month because there's still 10 to 20% juice left, even in prices move down a bit or stay the same?
Are you saying, JK, that you bought the 70K call and sold the 100K call? Is that
That's what I assume.
Just long the call spread. That was an epic trade, by the way.
Yeah. Good timing. There's still going to be some intrinsic value in there, right? Or sorry, extrinsic.
This is this December.
December. We're getting close.
Well,
he says yes.
Should I what? Oh yeah, okay.
If it was a long call spread.
Yeah. My view is that we have just had a humongous run up as a result of a euphoric catalyst of the savior of the free world being elected, and not assassinated. Exuberance springs to mind, and the possibility of a reversal of this rally is ever present, and as is a continuation of it, maybe. But as I said to my dear friend Marcus, sometimes important to know when you've won, and it's never the wrong trade to take a profit, because you can always come back in again.
When in doubt, scale out.
Yeah.
So you sell a third of it or 2/3, now, for example, and you let the rest ride in case it does rip up to 120. Great, wonderful. You're making money. So
this phrase also works when you're dating as well, right?
Scale out
when
you're dating? How do you scale out at girls?
If in doubt, get the hell out.
Oh, okay, get the hell out. Yeah, I said scale out, not get the
hell out. I mean,
fair enough. Okay, question from Paul. I'm doing Bitcoin synthetic mining, getting small gains per week, accounting in Bitcoin terms. Yep. But then one big move against you offsets it all. Oh, you're preaching to the choir, brother. I wonder how much of my gains are eaten up by the deribit fees, though. How to find out?
Well, you can go to the screen where it says "Show me my fees."
What?
There's a. Did you not know?
No.
Yeah, look. If you go to.
Are you share your screen so you can show me?
Yeah, okay. Because I'll show you the SynthMiner screen.
You mean just accumulated fees?
Hang on. Turn screen share on. Entire screen. Bam. Right. Here we are.
Right.
So here's our SynthMiner, and if you go to the
must be under the little man. Yeah.
P&L analysis. There we go.
Oh.
We can select your date.
We
can go get analysis, and they'll very kindly show you. So funny enough, we had this same. This is the SynthMiner, right? Ignore the stuff prior, but this is our SynthMiner. And yes, that massive drawdown is the market going against us because we were too long puts, too short puts rather. Let's all come back. And these are the fees we've paid.
Huh. Who knew?
Deribit are perfectly open about robbing you blind. Well, I like it so much.
Yeah, and now we started to use the combo book a lot more, and we'll see if we can reduce those by a good portion. So, yeah. Good question. I didn't know that was there. I guess I just whatever.
And I'm guessing that because this is available on the UI, you can get it via API as well. Oh, this thing probably downloads it, right?
View full screen. Download
CSV. There we go.
Geez, there. And for super nerds like Vladimir, he's going to be downloading that and just diving in and ripping it apart. I'm just joking, Vladimir.
Yeah.
Okay, another question over there, but it's the same one. JK put it in the other file. Okay, hey, we're getting close to the end of our time. Richard, any last thoughts? And if anybody has any last questions, you dump them in now.
This is the last thoughts on how the SynthMiner is doing. So remember, this is where we had our mega drawdown in the summer.
Yep.
And we all thought, oh no, it's all over. We're doomed. We lost money. Well, here it is. It's all coming back. We were a bit over leveraged. And in fact, we made a cardinal sin, didn't we? We chased the market up, kept on selling puts as it rose, and we were victims of mean reversion.
Victims of mean reversion. And selling puts in a climbing markets is something I always do very lightly, and I think we did it a little bit too much. So Vladimir says I already did in terms of downloading and nerding out on that. Just eats up all that data. Love it.
You love it, yeah.
Cool.
Yes, and actually, that on that note, so answering a number of questions all in one. Here we are at the end of a massive rally. Vols are quite good, so there's still some premium if you are thinking of selling puts. But if you do sell puts and like 88 or something, and then the market does tank down to like 70 or 60, you're going to probably want to be rolling out quite a long way to feel comfortable that it will then mean revert back up in some time scale. Now we did this back. Remember when we got caught out mid this year, we shifted all our puts over to December, and we thought, screw it, we'll just store all that value in December, and then gradually we pulled it back and got it to decay away. So you could do that.
Did a really good job. Yeah.
You mostly, because I was away. But
Yeah, it's tough on a small account. It's just super sensitive to big moves.
Oh, and that's another thing that's occurred to me. So clients come to us and they say, how much can we put in for a test? And we used to say $250,000 would be a good test, but that was when Bitcoin was 50K or under. So basically, it was a 5 Bitcoin test. Well, now I'm thinking, because of the size quanta of Bitcoin, we're saying to them, actually, it's 500,000 because it's still 5 Bitcoin. And trading when we started this, trading a 5K Bitcoin account was kind of possible because that was 0.1 of a Bitcoin, and therefore you could do 0.3 of notional, and it was only 3 times your NAV. Well, now a 5K account is only 0.05 of a Bitcoin, and so one contract of 0.1 is already twice your net asset value. So I have actually suggested to certain executives at deribit that they reduce the trading size quanta.
Wouldn't that be nice if they could? You'd be able to fine tune things a little bit more. Yep, fantastic.
But we're saying I've traded quite a few crypto options exchanges, and deribit is still my favorite.
Yeah, we like them. One last quick question here. We've gone over time, but let's do a question from Paul. 5 Bitcoin account. You want to make 50 basis points per day, or still 10 basis points per position?
Well, on the systematic book, we aim to make about 3.5% a month in Bitcoin returns, and about 5% a month in dollar returns. So depending on what the client wants, whether he wants Bitcoin or dollars. So that's quite low, isn't it? I mean, 5% a month is half a 15 bips a day. That's what we're trying to aim for.
I feel a little disappointed in you.
Well, the thing is, when you're degenerating into your own account, all you're thinking about is getting rich. But when you're long other people's Bitcoin, all you think about is not losing it.
That's right. Yeah,
and that's all they think about too.
That's all they think. Yeah. It's harder to be more aggressive. People are much more sensitive, even though you'll make it back.
The thing is, if you're trading other people's money, if they pull out, you won't make it back. And if you do suffer a big drawdown, they'll pull out.
Yeah.
You've got to be sensible.
Yeah, there's a lot of girlfriend metaphors here too, which I don't think we should get into now. Fantastic. Core says, "Hey, trading deribit for 6 years now. Love it any day of the week." Yeah. Well, Core, you're Dutch, I think, and deribit was originally Dutch, right? They started a bunch of guys, and
as were most things financial in Europe. Frankly, that's
true.
It's the Venetians or the Dutch. Even the British East India Trading Company, I think, was bought from the Dutch.
Yes. And Goldfinger. No, let's not forget Goldfinger.
Yeah.
Or no, sorry, Gold member. Gold member, yeah, Gold member. Gold member. Austin Powers, one of the greatest. Just one last quick thing. Oh my God, we gotta go.
Hang on, sorry, this is from Paul.
Income per day measured in basis points.
Yep. We aim for 15 bips a day on average across the entire thing. And most of that is from Theta. There's also some Vega related profits, and we actually also make money on trading the Smile as well.
Okay,
so you've got this curvature, this curve of the ball surface. We trade that.
And just for clarity, everyone, Paul's asking: is the income measured per day in basis points or in portfolio level theta, etc.? Because some people say, "Oh, I want to make X amount of theta per day versus my NAS asset value or something." But I think it simplifies it to do basis points.
For us, that varies a lot. So in high vol environments, that theta becomes quite high.
Yeah.
And if you for example sold out of the money options, and then the market moves towards them, they move down the Smile, but they pick up a lot more Vega, a lot more intrinsic value, and so you find that your theta suddenly becomes massive. So it's a balancing act and an average. But for us, if we're printing more than 1% a day in theta of NAV, then that's an indication that the market's under stress. And if we're printing like less than 1/3 of a percent per day, then that's an indication that the market's all very calm and is about to get stressful.
Yeah, and that could lead to another topic where if you're trying to maintain a certain amount of income every day in all markets, it's probably the wrong way to approach it, because you're going to get smoked one way or the other. Yeah,
trade dollar yen if you want to do that. Don't trade Bitcoin.
Yeah. All right. Hey, that's a wrap for today. Last episode of November. We're into December already, if you can believe it, and Christmas and the holidays. Wonderful time coming up. So, hey, everyone, have a fantastic weekend. Next week, we should be back at the regular time on Thursday. You can always check us out over at Rogue Trader Academy. Join us for daily live streams. Hang out with us. Chat on Discord, whatever. Otherwise, we will see everyone next week.